Hello and welcome back. Today we are going to start basic income tax computation. Okay. So we have two main parts related to the calculation of basic income tax computation. The first part is taxable income. It is the income to be taxed for an individual for any specific tax year. Okay, and we know that our tax year runs from 6th of April to 5th of April. And secondly, we have income tax liability and income tax payable. If I talk about taxable income, then in the taxable income we have three key elements. First of all, we have non-saving income, then we have saving income, and finally we have dividend income. These are the dividend payments, for example, in case if the taxpayer have shareholding in any company and the taxpayer is receiving dividends. The saving income includes income in the form of interest, for example, interest from bank, building societies, or debentures. Finally, we have non-saving income. It includes income from employment or trade or profession. It is or trade or profession, and it also includes income from property business. Okay, so it also includes property business income. Now, if I talk about income tax liability and income tax payable, then it is the second part of the calculation. Okay. First of all, we have to calculate taxable income, and then we have to calculate income tax liability and income tax payable. In computing taxable income, UK taxpayer may be entitled to a deduction of a personal allowance. Okay, it is also known as PA, a level of tax-free income. We will study about it in more detail in our upcoming lectures. And the normal PA amount is available in your tax rate table. Now, before going forward, we have few terms that you should know about. The first term that we have is total income, and the second term is known as net income, and finally we have taxable income. Our total income includes all the income before any deductible payments. Okay, so it includes all incomes before any deductible payments. From this amount, we may require to deduct eligible interest and trading losses. Okay, so first of all, here we have eligible interest, and then we have trading losses, which we are deducting from our total income, and that's how we will get our net income. Now, from the net income, we will deduct personal allowance. Okay, and that's how we will finally get our taxable income. Now, please remember one more point, that in many questions there will be no eligible interest or trading losses. So in that question, the total income will be your net income. Okay, so please remember this point. I am repeating this point again. If your question does not include any eligible interest or trading losses, then in that case, the total income will be your net income. And from that amount, we will deduct the personal allowance, and finally, we will get taxable income. So, as we studied that we have two main parts for the calculation of income tax. It is our part number one, in which we are going to calculate taxable income. Okay, so first of all, please remember we will have three columns: column 1, column 2, and column 3. And finally, we have a column of total. In a column 1, we will have non-saving incomes, then we will have saving incomes, and finally we will have dividend income. In the dividend income, we will have income related to the dividend. In the saving incomes, we will have all the incomes that are coming from different type of interests. For example, building society interest, bank interest, or any other interest. Fine. And rest of other incomes will be included into non-saving incomes, such as trading income, employment income, income from business property, and pension. And then we will sum up all of these incomes. So that's how we are getting total income. Right? As we discussed earlier, we will deduct qualifying interest and trading losses from our total income, and that's how we will get net income. And from the net income we will deduct personal allowances, and finally we will get our taxable income. But in case if the question does not have any type of qualifying interest or trading losses, then in that case your total income or your net income will be the same amount, but we will use or we will label that amount as a net income. So that was the part 1 of the calculation. Now we have to calculate tax liability and tax payable as a second part of the calculation. So now we have discussed that how to calculate taxable income. Now it's time to discuss how to calculate tax liability and tax payable, which is our second step of the calculation. First of all, let's talk about tax liability. For the calculation of tax liability, we have to apply an income tax rate on our taxable income. Now please note this point, it is very necessary to follow the right order in order to calculate tax liability. So we will follow this order. For example, first of all we will calculate tax on non-saving income, then we will calculate it on saving income, and finally we will calculate it on dividend income, because the tax rates that applies to them will be different, and these rates also change depending on how much taxable income the taxpayer has. And then as a final step we will calculate tax payable. Now in order to calculate tax payable, we will use total income tax liability, which we have calculated in this part. Okay, from that amount we will deduct payee or pay as you earn. We will discuss about it in more detail in our upcoming lecture. In the calculation of taxable income, we have studied that we will deduct two amounts from our taxable income. The one was eligible interest and the second one was trade losses. Right? So for example, here we have total income. From that amount we will deduct eligible interest and trade losses, and that's how after deducting these amounts from our total income we will get net income. Now here we will discuss that which interests are categorized as qualifying interest or as eligible interests. Now first of all, let's say if someone is taking loan in order to purchase an interest in partnership, or a person want to contribute in a partnership in a shape of capital, and for that purpose he is taking loan, then such a type of interest on these type of loans will be categorized as qualifying or eligible interests. And if a partner is taking loan in order to purchase plant and machinery for the use in business, and if an employee is taking loan in order to purchase plant or machinery, and if it will be used in the performance of his duty, and finally on a loan to purchase an interest in an employee controlled company. Now, if I talk about an employee-controlled company, then it is the one where more than 50% of the issued ordinary share capital of the company and more than 50% voting power in the company are beneficially owned by individuals who are full-time employee of the company. That means in such a company, the full-time employees of the company have 50% voting right, plus they also own 50% issued ordinary share capital of the company. Then finally we have exempt income. The following are some of the most common sources of income that are free from tax. For example, first of all, we have interest or bonuses on national saving and investment certificates. Then we have income from interest and dividends within an individual saving accounts or ISA. Any type of income that an individual is getting from gaming, lottery, and from premium bound winnings. So it is very important to remember these information. For example, what we have studied here and what we have studied here, because in your exam questions the information may appear from this data. So it is very important that you should remember which income should be categorized as exempt income and which interest should be categorized as eligible interest. So that's all for this video. See you in our next lecture. Thank you very much.